Hi there, welcome to Kneppy Invests. Taking profits. You might have heard that saying before somewhere, and it might seem to be true on the surface, that you can't go broke by taking profits. And I do think a lot of investors do fall for this saying because even though it is true on the surface, if you dig a little bit deeper, it's one of the worst sayings for investors because you can't get wealthy by always taking profits. And what I mean by that is the most successful investors and the most successful investing strategy is hanging on to your winners. And that includes those companies whose share price has increased 10 to 20%, which means you don't take profits of those sort of companies. Now, I have fallen victim to this saying in the past because it does get quite exciting when you see a share price of a company you do own run up quite quickly, 10 to 20%, and you might think, well, now is a good time to sell out this company, take those profits. And potentially you might be even thinking, well, the share price might fall back. It's gone for a nice little run and it's due for a pullback. It doesn't always work, and I have fallen victim to this, including Aussie Broadband just recently, and the company I'll be featuring in this video, Mach7. I was a shareholder of this company for a while. In fact, the share price was going sideways for a period of time. And all of a sudden, in the middle of 2019, the share price just broke out and took off. And after a while, I just decided to take profits. And then after I sold out of Mach7, I just saw the share price continue to go higher, almost double from when I sold out. Now, in saying all that, the share price has pulled back over the past about 4 or 5 months towards 90 cents, which is just above the share price that I did sell out. And it does seem like 90 cents is a good level of support for this company. You'll be able to see that when we look at the charts. And if the share price falls below 90 cents, that level of support has been broken, and the share price will be looking, or chart will be looking fairly bearish for this company. So I am paying close attention to the share price movement of Mach7 and any financial reports this company does release, because I was quite bullish on the fortunes and the future of this company when I did buy into them a few years ago. And I have become a little less bullish just because of what's been happening with some of their financial reports over the past year. So before we have a look at their September quarter Appendix 4C, just a few facts in regards to Mach7. Mach7 is a healthcare company dealing with data management solutions. They were founded in 2007, and their history on the ASX is quite convoluted. In fact, there was a company called SafetyMed listed on the ASX in November 2005. SafetyMed actually went into administration 2010, came out of administration about a year later, sold out of whatever they were doing, and then they purchased some tenements. So they became a mining company in 2011. Withdrew from that purchase of those tenements in late 2011, and then acquired a company called 3D Medical in 2014. And then 3D Medical and Mach7 merged in 2016, and then they became Mach7 because I think probably Mach7 was the biggest company out of the two. So a fairly large, convoluted or long convoluted history when it comes to Mach7, beginning in 2005 with a company called SafetyMed. The CEO and co-founder of Mach7 is Mike Lampron. He only has a 0.4% stake in this company, so not a lot of skin in the game. So that is one slight negative when it comes to this company. There are a lot of investors out there who love it when management have skin in the game. The largest shareholder in Mach7, or one of the largest shareholders, is Australian Ethical Investments at 8.7%. Also, Climb Investments has 10.5% stake in this company. I think those are the two largest shareholders of Mach7. And the market cap, $220 million at 93 cents. And one of the reasons I did sell out at 2019 was because I thought the valuation was becoming a little bit stretched. But at times, when you do see or think the valuation is a little bit stretched, the share price can keep on running because the market can be irrational for a long period of time. And I still think a Mach7's market cap is a little bit too large right now for its financials. And you'll have a look at that during this video. And the tick code is one of my favorite tick codes on the ASX, M7T. Why do I think Mach7 valuation might be a little bit stretched right now? Well, just have a look at the financial year 2021 numbers, revenue at 19 million. Now, in isolation, that really tells us nothing. But if you look at financial year 20 numbers, revenue was only 18.9. So they only grew revenue by $100,000 from the previous year. In fact, when you look at operational cash flow and profit, it's gone backwards from financial year 20. Operating cash flow fallen from 4.5 million to 1.5 million, and profits fallen from positive 200,000 to negative 9.4 million. And the gross profit margins is decreased from 33.4% to 14.7%. They do have $17.4 million of net cash, but when you look at their valuation ratios, EV to operating cash flow is quite high, 135. But the reason that looks fairly high is because the operating cash flow is at 1.5. If we revert back to the financial year 20 numbers of 4.5 operating cash flow, you divide that by 3, and you're looking at around about 45, which is still fairly large for this sort of company. And price to sales ratio 11.6. So I do think there is some argument to say that Mach7's valuation is quite high simply because of these financial numbers and the lack of growth over the past year. One slight change I have made to these quarterly report videos is instead of comparing quarter on quarter, so September quarter right now, that's what we just had, to the June quarter, I'm going to be comparing year-on-year quarters. So looking at the most recent quarter, so September quarter of 2021, and comparing it to September quarter of 2020. So let's go back in time 1 year and see how Mach7 was performing into the September quarter of 2020. Receipts to customers, 3.8 million, and because staff costs were quite high at $5 million, this company was operational cash flow negative by 1.8 million. But they were quite active in financing and investing activities. In fact, they made an acquisition of $40.8 million. They also did a capital raising of $11.4 million. When you add all that up together, they decreased their cash on hand from $48.9 million to $17.8 million. So let's see how they have performed over the past year. As we get into our time machine and move forward 1 year to October 2021, so we can see how this company has performed in the September quarter of this year, we might have noticed that things have gone a little bit backwards for Mach7. Receipts to customers have fallen to 3.4 million. Staff costs have decreased from 5 million to 4.1 million. And the company has remained operational cash flow negative by 1.9 million. Now, I don't know if Mach7 has some seasonality around their business, and you'll be able to deduce that when we look at their cash receipts history, which I'll show you in the next slide. But comparing year-on-year quarters right now, it does not look good for Mach7. They weren't that active in investing in financing activities, so cash in the business fell from 18.4 to 17.2 million. Now let's have a look at the cash receipts history just to see if this has been the norm for Mach7, this drop in receipts from this quarter to the previous year's quarter. And as we look at the receipts history for Mach7, this is why I do like to look at the receipts history, because if we just compare quarter on quarter or year-on-year quarters, you might miss the whole story, because it does look like the September quarter in 2021 and the September quarter in 2020 have been the worst 2 quarters over the past 6 since the COVID-19 in March of 2020. In fact, 2 quarters ago, March 21 was their best quarter with $8.4 million of receipts. And generally, receipts are going up through time. There is a bit of lumpiness here. I would prefer cash receipts growth to be a little bit more smooth than what we see here, but you can't deny that the cash receipts are growing for Mach7 through time. If we have another few quarters like we just experienced September quarter of this year, that would be concerning, but more than likely we might see a little bit of a spike in receipts in the next few quarters, and that would put Mach7 back on track and potentially much more attractive to investors. As we look at the weekly chart for Mach7, and this goes back to 2015 when that safety med company acquired 3D Medical in, I think it was 2014, they acquired that company and then changed the name in 2015. Then 3D Medical merged with Mach7 in 2016, which was during the period where 3D Medical share price was in a well-defined downtrend. It was towards 2008 when we started to see a share price potentially move into an uptrend. So towards the end of 2017, start of 2018, when I decided to take a position in this company. And then the share price just went sideways until we saw a breakout in the share price in early 2019 on higher volume. That's always what you want to see, a breakout in share price on increasing volume. Share price back then was around about 17 to 20 cents. And we saw the share price increase from that 17 to 20 cents all the way to a top of 80 cents in about 3 months. And that's when I took my profits. And even though the share price did go sideways, retreat back during the COVID-19 financial panic, we saw the share price continue to go up until we saw it reach a top of $1.60 during the start of 2021. And we have seen the share price pull back over the past 9 months towards 90 cents right now. And every single time the share price falls below 90 cents, there's a little bit of buying that does come in. You'd definitely be able to see that when we look at the daily chart for Mach7. So right now, it does look like 90 cents is a really good support level. That could be a good time to take a position in this company, particularly if they do release a very positive and a better December quarter Appendix 4C, which is going to be released in about 3 months. So maybe you should remain patient, or you could take a position at 90 cents and the share price falls to about 85 cents and remains below 90 cents. You could just sell out as a technical trade. So that's what I'm looking at right now with Mach7, a potential technical trade for, and even though I'm saying potential technical trade, it could turn into a long-term hold if we do see some good financial performance out of this company over the next 2 quarters. As we turn our attention to Mach7's daily chart, going back to July of 2020, when the share price of this company was in a well-defined uptrend. There was a little bit of a dip in October of last year. That coincided with the overall market having a bit of a dip as well. And the share price fell to 90 cents. And that 90 cents level is quite important for Mach7. I'll talk about that in the next minute or so. Now, the share price then kept on increasing during the rest of 2020. Share price reached a high of $1.60 in February of this year. It does seem like there is a bit of head and shoulders there just by looking at it right now. And after that second shoulders, we have seen the share price of Mach7 move into a downtrend. And as soon as the share price moved towards 90 cents in the middle of July of this year, we saw a lot of buying, a lot of volume come in, and it forced the share price higher well above 90 cents. So it does seem like 90 cents is a really good, powerful support level for Mach7. And then again, towards the end of August, we saw the share price try to get below 90 cents. But again, a lot of buying came into the market. So a lot of strength pushing the share price above 90 cents again. The last few weeks, probably 3 weeks or so, we have seen the share price test 90 cents twice and again rebound off it. But the volume has pulled back, and that's a little bit of a concern to me that 90 cents, even though it does look like it is a strong support level, is showing a bit of weakness just because of that slowing or decreasing volume. So right at this point in time, I am looking at 90 cents as a good possible entry point as a trading parcel. And if the share price falls below, say, 85 cents, that would be an automatic sell. So I'm only looking at possibly trading Mach7 right now just because I don't really like the financial state of the company. They have to show me in the next 2 quarterlies that they have turned things around. I just don't like what happened in the last quarter. But I do think there is that potential. They will turn things around in the next 2 quarters. We'll see much higher receipts. And if we do see that, that could be the catalyst, the impetus for a shift in sentiment around this company. That's all I have for this September quarter Appendix 4C video for Mach7. If you have any questions about this company or any other company on the ASX, I'd love to hear your thoughts, your opinions, your questions. So leave it in the comment section of this video and I'll get to answer anything you have to say, most likely, possibly not, depending on my time constraints. Otherwise, I am not a financial advisor. If you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.